Forget everything you've heard about investing. You don't need Wall Street knowledge, stock picking skills, or a fortune to start. In fact, with just a few $1,000s and the right index funds, you can begin your journey to financial freedom today. You wake up one morning and instead of stressing about bills, rent, groceries, and even that vacation you've been dreaming of, you realize they've all been taken care of. Not by your paycheck, but by your investments. Sounds too good to be true, doesn't it? But it's not. A lot of people assume investing is only for the wealthy, or that you need some fancy finance degree to figure it out. That couldn't be further from the truth. The reality is, with the right approach, you can start building passive income with just a few $1,000s. In this video, we're cutting through the noise. We'll show you exactly how much you need to live off index funds. No fluff, no confusing terms. Just straightforward numbers, practical strategies, and a step-by-step guide to help you reach financial independence. Chapter 1. Why index funds? Ever tried picking individual stocks? If you have, you know the roller coaster it can be. Up one day, down the next. It's exhausting. But what if you could invest without all the guesswork and stress? That's where index funds come in. Instead of putting all your money into one or two companies, index funds let you spread your investment across hundreds of businesses. This diversification lowers your risk and gives you steadier, more reliable growth over time. And here's the best part. They're incredibly low maintenance. You don't need to spend hours analyzing the market or worrying about daily fluctuations. Index funds simply follow the overall market's performance, which has historically grown by about 10% annually on average. Plus, they're cost-effective. Many index funds have super low fees, some as little as 0.015%. That means more of your money stays invested and grows over time. Even Warren Buffett, one of the greatest investors of all time, swears by them. Why? Because most people who try to pick stocks end up underperforming the market in the long run. So, if you're looking for a simple, proven, and stress-free way to build wealth, index funds are your answer. Now, let's tackle the big question. How much do you actually need to live off them? Chapter 2. How much do you actually need? Alright, let's tackle the big question. How much money do you actually need to live off index funds? Let's say your goal is $5,000 per month or $60,000 per year. For most people, that's enough to cover essentials like rent and groceries, with some room left over for the occasional luxury. But how much do you need invested to make that happen? It all comes down to something called dividend yield, the percentage of your investment that's paid out as income. S&P 500 index funds have an average dividend yield of 1.24%. To earn $60,000 a year, you'd need about $5 million invested. High dividend index funds offer 3 to 4% yields. Now, you only need about $1.5 million. Now, I know what you're thinking. What if I don't have millions to invest? That's where growth and compounding come into play. By reinvesting your dividends and consistently adding to your investments over time, even a modest starting amount can grow into something substantial. For instance, starting with just $2,000 and regularly contributing to your portfolio can, over time, snowball into a six-figure nest egg. It's not about having a fortune up front. It's about being consistent and letting time work in your favor. Chapter 3. The Power of Dividends and Compounding. Here's how it works. Dividends are payments companies give to their shareholders. When you reinvest those dividends, you buy more shares, which then earn even more dividends. This cycle is called compounding, and it's the secret sauce that turns small investments into significant wealth over time. Let's break it down with an example. If you invest $2,000 today in an index fund yielding 2.5% in dividends, you'll earn $50 per year. Instead of spending it, you reinvest it, so now you own more shares. Fast forward 20 years, and that original $2,000 could grow to $15,000 or more, all without adding extra money. And if you invest consistently, say $90 a week, those small, regular contributions can snowball into a six-figure portfolio in just a couple of decades. The bottom line? Dividends alone won't make you rich overnight, but reinvesting them can set you up for serious financial freedom over time. Chapter 4: The Ideal Index Fund Portfolio for Income and Growth. Now that we've seen how dividends and compounding work, let's build the ultimate index fund portfolio, one that balances income and growth perfectly. The secret? Diversification. Instead of putting all your eggs in one basket, you spread your investments across different types of index funds. This approach maximizes your returns while minimizing risk. Here's a simple yet powerful portfolio breakdown. $50 in high dividend index funds like VYM or SPYD. These funds focus on companies that pay steady dividends, offering yields of around 3 to 4%. They're your go-to for reliable income. 30% in growth-focused funds like VOO or IVV. These track the S&P 500, which has historically grown at about 10% annually. They're your engine for long-term wealth building. 20% in international index funds like VXUS. Adding global exposure helps protect your portfolio if the US market hits a rough patch. Now, let's talk numbers. If you invested $110,000 upfront, plus just $100 per week, your portfolio could grow to over $1.2 million in 30 years, generating $5,000 per month in passive income. Don't have that much to start? No problem. Even starting with $2,000 and sticking to a plan can snowball into financial independence over time. The bottom line? A smartly balanced portfolio can give you both income now and massive growth later. Chapter 5: What if the market crashes? What happens if the market crashes? Should you panic and sell everything? Absolutely not. Market downturns are a normal part of investing. The S&P 500 has faced dozens of crashes over the years, but it has always recovered and gone on to reach new highs. Here's why selling during a crash is the worst thing you can do. Losses become permanent. If you sell, you lock in your losses. But if you hold, history shows the market will eventually rebound. Dividends keep flowing. Even during downturns, dividend-paying index funds continue to provide income, giving you stability. Buying opportunities. When prices drop, reinvesting dividends lets you buy more shares at a discount, setting you up for bigger gains when the market recovers. The bottom line? Stay invested. Keep reinvesting and tune out the noise. Chapter 6: Action Plan. Now that you understand the power of index funds, let's get practical. Here's exactly how you can start investing today. Step 1: Choose a brokerage. Pick a reliable platform like Vanguard, Fidelity, or Schwab. Look for low fees and an easy-to-use interface to make your investing journey smooth. Step 2: Pick your index funds. For growth, go with S&P 500 ETFs like VOO or FXAIX. For income, consider high-dividend ETFs like VYM or SPYD. For diversification, add international funds like VXUS to your portfolio. Step 3: Automate your investments. Set up automatic contributions. Even small amounts like $50 per week can grow significantly over time. Step 4: Reinvest dividends. Turn your dividends into more shares. This creates a snowball effect where your dividends generate even more dividends over time. Step 5: Stay consistent. Don't get caught up in daily market ups and downs. The longer you stay invested, the more your wealth will grow. And that's it. No need to stress over picking individual stocks or timing the market. Just set it, forget it, and watch your money work for you. So, as you saw, the lowest amount you need to live off of index funds is not as much as you might have thought. The most important step, however, starting now. Don't wait for the perfect moment. It doesn't exist. So, are you ready to take control of your financial future? Drop a comment below and let me know your investment goals. And if this video helped you, don't forget to hit that like button and subscribe for more smart money tips. Trust me, your future self will thank you.